Can you all see my screen?
Yes, I can.
Perfect.
Yes.
All right. Awesome. Okay. So, I was just looking at dollar. So let's start from here. This is a US dollar index. And after, I think we were discussing the other day, after the elections here, the dollar has really been on a very, very strong bullish trend. And, it continues, right? You see from, this was, I think, from the election or somewhere here, right? So from 100, 304 all the way now getting close to 106. And that's a big move in dollar, right? Started obviously end of October, beginning of October, but it's picked up steam. And I am also, looking at these objectives, right? So 106.5, very likely, right? The dollar is gonna purge this, potentially 107. So, it's really interesting, right? When the dollar has been on this kind of a swing, I mean bullish trend, and so are the indices, right? So I think it's really um, a reflection of a lot of bullishness, right, in the markets broadly, and sort of in a way looking anticipating a lot of economic activity, right, in the economy. So that is what all these sectors and dollar, all that is telling us. Now it's just a question as to till what time both the indices and dollar will start to go up, together higher, right? Because there will be a point when the indices will start to come down, right, because of very strong dollar. But again, it's just a little early right now. We're still in, I guess, uh, close to the election, right? I mean, we had it last week, and the markets are on a sugar high, looks like, right? Looking at all that, but again, that can sustain. But coming back to also dollar, as I've started to look at gold, right? I will come there as well. But any of you looked at gold charts? I mean, I'll continue to do that, um, and if there's any questions, etc., I can answer that, right? So, but again, bottom line, dollar is strong. We have to be mindful of that, right? Now let's just come to the our Nasdaq, right? So again, not too much from last few days. Um, it's just been back and forth. Yesterday, it took the low, right? This is a level that was taken out, and again it reversed, and it's been sort of kind of choppy, but this is um, it's again very, very bullish looking chart, right? Um, if I look at 4 hour, this is where this all the action has been, right, on this fair value gap, and it's just been trading in a few times, wicked one time, which was yesterday when it took the low out, and then again, closed above, and so very, very obviously tight range, right? But one of the things that I'm also paying attention to is this inversion. So we have one inversion at an hourly level, right? Um, so when we have something like this, right, there's always a chance that the price can go and trade into this inversion and then retrace back. So specifically for today, we have to be mindful. Once it closes again above this, then this high, and then it may, potentially even higher highs, right? Maybe on the cards. But I'm just going to be mindful of this, that on an hourly chart, there is this inversion. Actually, um, I know I should not call it an yeah, it is. It is an inversion, right? So yeah, so we'll have to just be mindful of that. And let me just take this out. We have, the next significant sell side is 21086 here. So that's on NQ, and ES. If you look at it, ES is not didn't even purge the low yesterday, right? So it's been really strong. Okay, and so there's not too much out here to sort of look at, right? It's super strong, and so for ES until anything happens, right? It's right, just buy the dip, right? And that is what is fueling, right? And that looking at the ES chart and looking at, in fact, even if we go and look at an hourly chart, there is really not too much out here. But let me just draw this a small thing that has been created. So this is again, ES has also been trading. There is a fair value gap, right? Bearish fair value gap, but relatively it's stronger. So primarily I'm just gonna be looking at this and then deciding in terms of what needs to be done, right? And this is the buy side, which is 21249. So we can do that. We can we can look at the minute chart and identify this liquidity here. So that is that is what it's looking at this. Let me just knock a few things off here. It's just too much going on. I'm just drawing this. This is London low here. Gonna draw it.
Good. Can I ask you a quick question?
Oh yeah, please.
That gap that opened up on Sunday's opening, that big huge gap,
Uh-huh.
does that needs to get filled eventually? Does it to get filled or what?
Yes, it does get filled eventually because the gap, many a times there is no trade, right? It just opens up and the price moves one way and leaving that, you know, the gap. And so it's a very likely draw for the price to come there. So yes, it gets filled eventually. Most of the time it gets filled the very next trading day, right? Once it's formed, but it's not a rule, obviously. But eventually, yes, it will get filled.
So this is not considered just like a fair value gap.
No, it's we denote it as a new week opening gap, right? NVOG high and a low.
Right.
So if you really look at this one, this is the gap you're talking about, right? With
Yes.
Friday, and so there was really no trading, right? So at all, once this opened up and then it went up and then eventually, I think you see this action got filled. But even if it gets filled, it's a little bit different from the regular gaps or the fair value gap, in the sense that you see how price keep on referring to this gap here, to the tick you saw, right here at 8. And again, so you see once the price has filled it and traded below it, it sort of acts as a resistance, you can see here, even the overnight session, the price came and touched. So what would be really bullish is the price again going back and closing above it, right? And then the price can trade back in, and then we can see some reversal. So this is a very important inefficiency, right? I call it as a significant inefficiency, and that's why it's on the chart, right? It's as you can see, the evidence right in front of you.
Yeah. All right.
Okay. All right. So this is what it's the NQ is looking, and so we have about 15 minutes till the open. But guys, any questions or any observations that you all have seen in your trading? Anything you share? Just opening it up, right, for everybody. We can discuss that right now. How has been yesterday or last couple of days for you guys in general? Um, have you been trading? I mean, are you feeling the price action where you can read it right? Because the first step is reading it right? And then obviously I'm more in interested in reading, not so much interested in whether you executed it or not, right? That's just a thing that follows. So yeah, please go ahead. I think someone was saying something.
Oh,
Yeah.
yeah.
Oh, go ahead. You go ahead.
No, it's all right. I was just going to share the observation. Yesterday's price action was very, very nice. Just to read, it gave very decisive reversals to yesterday from NQ.
Good.
Yeah, it was. Yeah, I agree. The trades that I took yesterday, my only issue now is I'm on this system where I do a strict 1 to 2 risk reward. So it's just I'm in a data gathering phase, not really like trying to make profit. Like right now, I'm just trying to gather information, and I'm realizing that I'm always getting a lot of points, but it doesn't really quite hit that 1 to 2 a lot of times. Like I took 4 trades yesterday, every single one of them hit 1 to 1. A couple of them hit 1 to 5, but only one of them hit 1 to 2. So I'm really trying to adjust my stop, and it's difficult to base it around the next like liquidity because sometimes the risk reward doesn't make sense if you're going to do that. But then again, it doesn't really make sense on the 1 to 2 that I'm doing now because not every trade is the same. So I'm really trying to come up with a good system.
Okay. Yeah. I mean, that's a good progression. Sounds like, Andrew, right? Because you've sort of graduated to that stage where you're trying to define your own trading model, right? Parameters for that. So that's good. And if you once you have a good amount of data, like when you've tested it and you're convinced, feel free to share that, right, with the class here, with everyone. So maybe others can benefit as well. But that's a good one. It's a good problem to have, right? Where you have started to think about what should be my risk reward, and you're trying to fine tune it. Cool, very very nice.
Right. And if anybody's interested, I posted one of my findings in the general chat, the student chart analysis. These breaker blocks, they come up all the time, and they're usually pretty profitable, especially at a liquidity level. Like right now, we just had one around 8:50 a.m. right off the NWOG low. So when it came back up at 9 a.m., like that would have been, I mean, I don't trade between these hours, but when it came back up and tested it, that would have been a decent short trade around 9:01. I mean, these are kind of the patterns I've been finding, especially considering you had the fair value gap, especially considering it, it reversed it, it met all the requirements.
Yeah. No, I mean that's thing with breakers. If you can, for breakers, right? One of the things that I'll say is, so for example, let me just make it right. So let's say you have something like this, right? You're going. So this is the breaker, right? This is the breaker here. This is a, let's say, a bearish breaker, right? The price trade backs into this and then comes down. What is important is also to note that when these breakers, right, when these the down close candles, they form the breaker. What is the level of the liquidity now? When this breaker was formed, okay, there were few liquidities involved here, right? Let's say, I mean, in this line, one was this one. My orientation is for the bullish. I'm just trying to reverse it. Just give me a second. Yeah, bearish. So the liquidity would be somewhere here. Oh yeah, I was looking at what made this breaker obviously was this price action, right? This leg. So what is important here is this one, right? The high. Is this a significant liquidity? Okay, because this liquidity, the more significant this liquidity is, right? This buy side here. The more significant this liquidity is, the more significant the breaker is going to be, right? Always note it down. So even though we may get onto the trade on this particular leg, right here, somewhere here, however, this really is driving this entire leg, right? Because if there's anything significant that's still out there, your breaker very well may fail. Okay, so always this liquidity, even though it was purged here, would still play a role in defining what we're trying to do, right? So if you go and look at it, from that standpoint, any breaker, obviously on the charts that you're trading, what kind of it really is a very important one. And not only that, I will also add that when this leg gets created, okay, obviously there is a liquidity purge here, right, on the sell side, because that what makes a breaker here, and there may be something here as well. Okay, was this again something which was significant, right? So anyway, my point is more so, as you are evaluating breakers, look at this one, and vice versa for a bullish breaker. Okay, you will see that these breakers are a lot more that you can trust on. Okay, anyway, so that's.
And Vivek, when you say it's more significant, that is you're
So like
basically
let's say a session liquidity, right?
okay.
If it's
So
a session
session,
liquidity,
okay.
or if it's a daily high or a low, or
Gap or something, yeah.
Stuff like that,
Okay,
where then you can your probability of the breaker holding increases, right?
got it.
Okay, so this is so we'll wait for the thing to start. Now if I go to a 5-minute or a fifth, let's just go to 15-minute. I want to see where the liquidity pools are, right? 15-minute is really a good chart to see how it's all stacked up. So we'll see, this is Asia. The London purged the low and then moved on, right? So this has really been one of the, in a bullish market, this is what you will see almost every day without fail, till the market stays very bullish. Asia high, low, purge, and then start to move even higher in New York. Excuse me. Now I'm just looking at, okay, so this is all Asia high, low, right? Yeah, I mean, there's really not too much. I was just trying to see if there's any equal highs, equal lows, really nothing that strikes out here, right? So we'll just, now one of the things let me just clean this up. So one of the things I'm looking at here is, okay, so first, also, this is Monday, Tuesday. So Monday, this is AM high. Okay, this is yesterday's high. PM, yeah, everything has been worked up. So this again, this is low. Yeah, so I'll have to just look a bit harder. This is PM high. Yeah, it's been so tight, right? there is really nothing, any session other than the high and the low that comes in picture here. But one of the okay, we'll leave it here for now till the opens and then we'll see. But one of the things that obviously we can see here is when, you know, all these are stacked one, right? So this is here. These are all stacked, right? So when the liquidity is stacked this way, especially after the open, if the price has to go higher, you know, I would like to see some kind of a manipulation here, and then perhaps some bit of reversal signature. So we'll see. But yeah, there's really nothing that stands out today, right? Because of the very, very compressed range market. Now let's just look at gold. So gold is something that I have been starting to follow quite a bit last few days. So let me just start, right? I think just a quick rehash as to what we did. If you remember last week, we talked about a fair value gap that was for monthly. Some of you may remember, right? This was the target. 2619.5 was looking like a high probable target because of the dollar. We talked about dollar being very bullish, this coming down, and this hit the target, right? I mean, there was this big one because now the gold has been on such a tear, right? Bullish. There will be some sort of reversal here, right? One can expect some bit of retracement at least, if not reversal. You know, because the dollar is still bullish. You know, I mean, dollar is still going higher, so we can't be outright bullish on gold still. However, you know, I'm just looking at some kind of a retracement. Okay, so this was a low. Now this is the high, right? If I look at on an hourly chart, this is what gold looks like. So I was just looking at it and, you know, thinking about there's this one area of consolidation that is sort of standing out right now, even though it's very small. Why standing out is there are equal highs here, right? Actually, yeah, kind of was first, but still equal high, right? This one, 2682. So if we see some kind of a retracement, this may be the terminus, right, where it can get to. But obviously, you know, this is quite a distance, so we'll have to look at the smaller chart and see. Now on smaller chart, in fact, there are some other. Now 2682 is this one that I had drawn there, right? But on the smaller chart, I'm looking at even the higher probability being this guy right here, 2633, right? Obviously, which is not too far from where it is. So anyway, this is gold, and I guess you know. But any of you trading gold, or any of you have interest? Because I want to make sure that I'm only going to talk about it if there's an interest. Otherwise, I just can cover it at a very high level. But
I'm definitely interested.
okay, did you now the way I'm looking at this one, right? Gold is where you know, because I still do not have an intraday trading model, right? I am looking at a higher time frame, so whatever I'm talking about, right, even the trade, look at it as more like a swing trade, right? And once I have the intraday trading model with time and all that aligned, I'll get there. But for now, I'm just starting from the higher time frame and looking at it as a intraday trading model. So here, if you really look at this from what And let me just get to a 15-minute chart. Maybe the visual will be even clear. So you see this consolidation here, right? Now superimpose it with something like this, right? So this bigger consolidation, and I see that gold is following this patterns almost every time that I've looked at. So I started to pay attention to it, right? So this is something like this. This is what the gold chart looks like. Okay, so this is the original consolidation that I've drawn, right? 2633.4, and we may consider this as a one stage, two stage, three stage. I mean, so the markets obviously, so these three level, and we can look at this as a reversal point, right? When was this confirmed? To me, it's already been, it has taken the high here. You see this high of this consolidation and the high of, and let's even combine this all together, right? Make it two, it's fine, doesn't matter. So the high of this consolidation, which is 2624, is where I think it should get to. And typically when you see pattern like this, right? Original consolidation, uh, first stage, second stage, and all that, what you will very what you will find is that once this first level high is taken out, like it was taken out, the price can come back in this block, in this entire block, right? And then again resume the journey upward, right? So now what I'm looking at this action here is sort of to take this high, take this high, maybe retrace a little bit, and then take this, right? Something like this. So again, I'm developing the model, but at least for temporarily, I'm looking in for a bit of retracement, getting into it. Maximum like stretched would be 8.2, but we'll see how it reacts here because there's a lot of activity here as well. So 2633 is a better realistic one. But so that's how I'm sort of deciphering it. But again, at this point in time, because of the dollar, I'm not really inclined in taking any um, trades like swing trades, just because the dollar is really going higher and the gold may again come back sharply down one more time, or maybe for some more time, right? So something on those lines is what I'm looking at. But the last one was very, very clear, right? In terms of gold dumping, looking at where the gold was trading that high and then given the dollar. So again, that's the kind of model I'm looking at and developing. So sorry, did I miss anything? Someone was saying anything? Okay. So we have the market open. Let's just look at the market open here. And so again, sharp move down, created equal low. So let's see where it settles. Right now. This was quite a move from all about 50 points after creating this or engineering this liquidity right here. And I think there's still no fair value gap.
Vivek, can you
So
hear me?
it's cleaned up pretty much this liquidity as well on the buy side. And now let's see. You see, it's really all the price action that you see. It's the first foremost driver is the liquidity, where the draw is, right? And almost half the battle or more than that is just about knowing where the market is trying to go, right? Obviously, this is, you cannot know after the open where it is, but after the fact, this is where it wants to go. And it did. Now let's see what it wants to do. At some point, it will come back here, right? Because these are clear liquidity pool. Equal lows, I was just looking before the market was not there, but now it is, right? So this is, the market is going to come back. The only thing is that once we see something like this, doesn't mean that it's going to come right away. We still have to wait for the right time to come. And sometimes, often it will happen during macro. Sometimes it can just knock it out right during the opening range itself. All that, right, are possibilities. But this is definitely,
Vivek, can you hear me?
yes, I can hear you now.
Hi. Just regarding some PD arrays from yesterday and Friday, which have still been untested above the price where it is now. Are they still relevant to be used?
Yes, if they have not been tested, they're still very, absolutely, they are relevant.
Great, thank you.
Yeah, again, similar. since the overnight high has been taken, if it closes below 930, right? Obviously, what is the impediment or something that's standing between the price and these lows, right? I mean, one of the significant inefficiencies is this one. So the price closes below this, this would be the likely draw, right? 21181, and you see how it just nicked it to the tick here, and this sort of signifies, right, how what role liquidity plays in running the market, right? So we'll have to wait, and the 950 macro would start as well in about 8 minutes.
My lines could be wrong, but I've got an Asia high just a little bit above still that hasn't been taken.
Oh yeah, this one. Oh yeah, no, that's an Asia high, right? This is London high. You're right, Asia high is this one. I may have misspoken. This is the Asia high. This is it, right with NVOG high, right? This is Asia.
Right.
And
Right.
this is 350. So this is London high. The London high has been taken out, right? Significant session liquidity.
Or equal high, it seems.
Yeah, I mean, now they've made it an equal high, just nicked it. So it may work maybe some things around here. And then, obviously it will go back and forth, and then we'll attack this again, right?
Right.
A shallow purge. And then there's an Asia high as well, right? So just from the looks of it, looks like at least the AM sessions looking like a range bound day. I'm just checking on some other calendar if there's anything significant. What's out there? Yeah, so tomorrow is the CPI, right? And then followed by PPI and unemployment. So starting Wednesday, Thursday, there will be, there are events, but nothing obviously so far this week significant. So, sort of logical that we can still have one more range bound day, just like yesterday. It's actually very important, right, in trading, just to anticipate what kind of trading day we are in, because then our minds sort of gets tuned to that, and then we are not looking for home runs, right? We are not looking for big 100 200 points, even with our runners. We are looking for clear in and out, right? In a range bound day, and that makes a lot of difference in our trading. So until proven wrong, at least for the AM, I'm looking for a range bound day.
Vivek, what range is that you're looking at?
So if you really look at that sandbox, right? If I have to, I'll just draw it right here. I mean, really Asia high to Asia low, right? The session, because this is really the range here, or the biggest range, the Asia. That's it, right? So that can be the sandbox for us to look at, and then all these points, intermediate points in between.
It's a very D-shaped volume profile for the whole week so far.
Yeah, it's logical, right? Because it's distributed. It's very, very range bound.
Very balanced profile.
Yeah. So, when the price goes back and forth, guess what? law of average, right? Most of the volume is traded in between, right? Anyways,
Yeah.
it will turn out to be D. It's but yeah, that's what it is. You see how the price is working its way lower now. It used this, created this, came back, tried bouncing it off from here, reversed, made it an inversion, and now working out of this to get to this liquidity pool right here, 21181, and then there's obviously stacked liquidity, as we were talking about, right? So the manipulation did happen, not this way, happened on the other side, and now it's coming down, right? So the open right after the thing, the first manipulation did happen. This entire leg was, we can look at it as a manipulation leg, right? Now it's coming down, and I think it's gonna work its way through some of these, and it can again bounce and equal high NVOG. So we'll have to just focus on, for a day like this, we'll have to just focus on where are the turns happening and which turns can we trust, right? Because it can come all the way, knock it off, I'll be surprised, right? And then bounce, or it can actually do something like this where work its way through, come down, right? It can keep on doing all this, right? The dance around, and this is where there is obviously a bigger risk of getting chopped up, right? So we got to be very careful, and then ultimately it really boils down to, okay, what are the turns that we can trust on? What's a reversal we can trust on? And that is where the time would come, right? So on a day like this, I will even be paying a lot more attention to the macros, right? Because it has a higher probability setup, right? It provides a higher probability setup, and it also will then provide a frame, like a measure of the risk, right? As you're looking at these PD arrays there, and then you can have a favorable risk reward, and you can still get onto the trade. Even let's say 1 out of 2 works with a good risk reward, you will still be okay. Statistically, it will, the probability will be a lot higher, even for a day like this, where we can anticipate a lot of twists and turns. So that's how I'm sort of, again, it's all part of the process, right? Preparing myself in terms of how I'm going to be looking at today, right? Just setting the expectation for myself. Let's see. So this one, keep on checking it. So did go there, didn't purge it, but I think it's created equal high, working its way through. Yeah, same, I mean, as anticipated, I guess. We'll see. So now let's see what kind of setup we're getting in macro. So this is the macro open, 950.
And it looks like ES already took the highs. What do you make of that when I've been looking at the ES versus the NQ, and it's quite interesting kind of watching them dance together.
Yeah, yeah. You know, I mean, generally, this is what ES has been, right? ES has been much stronger, and it's it takes its high some, you know, and it forms an SMT. In this case, it would be a bearish SMT, right? You know, it will come down, but very quickly reverse, just because NQ would also reverse because of the strength of the ES, and that has really been the pattern, right? For this one. After the especially last week or so. Yeah, all the overnight highs has been taken out, right? Yes, and so this is trading as just 930 FPG. Okay, so again, one more time. It can purge this, right? Looks like it's going to purge this. And that may give us something. So the way I'm looking at this data, and given all this build up here, right? I'm looking at this as, again, a manipulation, you know, in this macro, right? So now these equal highs have been purged again, right? And, you know, so, you know, what I'm going to be looking for is some kind of a reversal signature. And in fact, if you look at NQ, right? NQ is very, all of a sudden, ES is weaker just for this price fractal, right? So the way I'm looking at it is there is a crack in correlation between ES and NQ, and this is a bearish thing, because if you look at 936 have been purged, whereas you see there is this clear SMT being made, right?
Yeah.
So this is what I'm looking at now. A lot of these conditions are being checked for a short trade, right? Or, you know, for some to attack these liquidity pools. The only thing that's still pending is a bearish signature, right? Like a inversion or an order block, right? That is what I'm going to be looking at here. So can we get an order block here? What would be the order block, right? So for example, I am going to be, because this is this all green candles, right? You know, obviously I'm just going to be marking this as an potential inversion. I want to see this as an inversion. And I think this would be enough for me to put in some kind of a trade, right? And again, always remember, guys, sometimes, and again, this happens with me often, used to happen a lot more earlier. That's why I always talk about that. Never ever forget the risk management part, right? So, you know, no matter how great a setup is, the risk management is the key, right? So this can be the low hanging fruit here. Okay, and this can be the risk here. Once it closes below this, something like that, right? But always, you know, risk management is the key. So position sizing is extremely important, is what I'm trying to say. But yeah, this will make this setup as a, you know, with all the signatures for us to look at short, right? A short trade. And again, all this in the context of today's close range day, right? A tight range day. But there's still no trade because
That 930 inversion is still there, right?
which one?
The 930 FVG that got inverted.
Yeah, 930 FVG is inverted, so that's a bullish right now.
Yeah.
The trade will be based on the macro inversion, which I've drawn.
Okay.
not on 9:30. So my right now, the way I'm looking at it right now, I'm looking for a short trade right now because all the liquidities have been purged on this side, right? There are a lot of liquidity here, so that's really the starting point. I'm looking for a short trade. This is the macro, so this is the time. The time is perfectly aligned. I'm looking just for a signature, right? Like an inversion.
But would that 930 FVG offer any kind of resistance to the short trade?
It will for sure, right? But the problem here is now there's two ways to deal with that. One is that you wait for this price to close here, okay,
Yeah.
and that there's nothing wrong with that approach also, by the way, okay. Then you sort of put your stop right above 930 FVG and target this. That would be the trade, okay.
Okay.
This will be a bit conservative, but this will be the for the night. But there we don't have to put all the stop right at the top. Okay. But
Mhm.
yeah, sorry, go ahead.
I was just gonna say, what about the Asia high? 21,249.5.
It
It
can
just
be
it
high.
just took the ratio high, I think.
It has not. It has not.
Huh?
So let's say that if we see an inversion, right? That would at least still be a signal to go head down because London has been taken out, right? One liquidity has been taken out. So I won't be worried too much of the Asia high. We see a signature here, right? Where it wants to go lower. Okay. Now it's
Oh,
taken.
well,
But
now it's gone.
Yeah.
that won't be even a consideration because even the Asia high has been taken, right? So it's even better that way.
And there's a nice 1 hour BPR that it could bounce off of right now that it's getting into.
This one, right? This
Right,
inversion.
yeah. Mhm.
This was the level that I was talking about. So
Right,
this was
right.
actually the Asia high. And now, so things are obviously even better aligned when something like this happens. The inversion, however, is still going to be this one. So I will be waiting for this signature right here to, for the trade to be a valid trade. But
If it inverts it, it looks like a bearish breaker as well.
yeah, yep, there is a bearish breaker. So remember the discussion that we were having just about, and I said that the effectiveness of breaker is this liquidity earlier. It is just coming in play right here. I mean, this is a session liquidity, right? So you see how all these things come together once we have a setup. But again, still not closing, not giving it up. And this is maybe just the back and forth we may see a couple of times. But that's why these inversions are so important. But this may set up to be a good one.
I mean, the next buy side would really be yesterday's high, right?
Yeah.
292.75. But
Yeah.
and then to get to that, it would have to invert this. What is this? This 4 hour BISI? I mean, SIBI. Yeah. So it would have to invert that as well.
Yeah.
But
yep. Yeah. No. So I definitely looking, logically
short.
Yeah, the price should come here. Because if today would have been that kind of a bullish day profile, yeah, I mean, you're just looking for bullish target, but it doesn't look like you know, given the price action. So
We are still trading between the overnight range.
yeah. So it's working its way through, still not closing. And it looks like we're gonna get the close here. Our first close. Let me just make it this. I think there is for folks who are not speaking, please be on mute. I think I can hear some background noise. So you see how it's worked its way through and it's coming for the liquidity grab, right? Now there is this liquidity, right? So sometimes we get a little bit, you see, we're only looking for the bigger one, ignoring this small one. Okay, so you know, typically what I do is, so let's say you've entered here, right? 223. You have 200, like it's not big range, 23 points, but I'll take some off here, right? That's partials. It's important just to have the right, uh, you know, the risk management part again boils down to that, and then you can have the rest carry on here.
Vivek, how would you place the trade quickly in this scenario? Like, would it be a market order or a limit order once it
Yeah, you can do a
went
limit
past the
order, right?
CD?
So you know this is the level, right here. So you can just do a limit 223.75. The price and this wick would have got the trade in, right? Traded back in right after the closing and immediately rejection. So You can do a limit, or if it's very close to where it is right now, you can even do a market, right? Because you don't want to be looking at 1-2 points and taking a risk of missing the trade, right? Especially in NQ, because it moves very fast. So either way, now if there is, let's say if this candle would have closed somewhere here and there was a gap of 10-20 points, then I would take a limit order. I would not increase that kind of a risk, right, for the trade. So stuff like that, I think you can make that call, right? But yeah.
So you place a limit order even while the price was hanging out in the
No, you have to
macro city area? Or?
you will have to place a limit sell only after the price closes, right? When the price came here,
Closes.
right? Otherwise, your order will get executed right away if it's above that, right? It's a limit sell.
Yes.
So you have to wait for the right time and then put it on. So when that is why there is such a important role the macro plays, right? If you wait for the time and price to align, you have the cleanest setups possible, just like we saw right now. Before that, it was all back and forth, back and forth, back and forth, right? But you see, the clean action happened right in macro. So I think that's where and once you start to understand, the nuances, and I know that a lot of you are already, getting really good at it. The trading becomes fun, right? You are waiting for the right time, you're waiting for the right setup, and then you are pressing the button without any action. And that's it. And you see, so this one is already the equal lows gone. And, so this was really the target that I had set, right? Now, it can go on lower. Given the kind of the day, I'll be okay. I'll be okay fine taking off my trades fully, because even if it runs, it's only few points, 10-15 points. However, the risk of running a runner like today, given the range bound day we talked about, we can see another like 30-40 point retracement in no time, right? So we have to be very, very precise with our entry and exits. And the first trade is done pretty much, right? So
It was 40 points, so that's pretty significant.
sorry.
I was just saying it was 40 points, so that was a pretty significant.
Yeah, this from here from 224 all the way to 181. Yeah, I mean it's 40-45 points. I think okay, let me yeah, someone suggested me to put mute John Wall. Let me see if I can do that here from participant list. John Wall.
Side note, it just purged those equal lows that you had
Uh-huh.
right at the end of the trade. Just making an observation.
This one, right? The equal
Yes.
lows.
Yep.
Yeah, that's what I said, that this is the time when you wanna for a day like today, you wanna just take your close your trade, right? Because it's gonna be a range bound day and it's going to retrace, right, from anywhere. So this was really the logical sort of terminus, as I sort of drew here, right? Equal lows, and that's it. So one macro, one trade down, right? I mean, in the sense, successful trade done. And there will be, I bet there will be a lot many opportunities today. Just if we focus on the macro, nothing else, and then try to see which way it's headed. It should be
So Vivek, just on the hindsight, those two green candles on the top, do they make a order block?
Yeah, they
Uh,
do. They do, right?
Those,
Absolutely. And not only that, they make a high probability order block because it also took this liquidity, right? Asia,
yeah.
this block. Absolutely.
So
It's an order block. You see how quick the reaction was from here?
yeah.
This is a typical characteristic of a range bound day. You will see immediate, like if you're not very precise with your exits, right, you will end up giving a lot of it back in no time, especially if you're trading NQ. That's why for today, I look at the first, you know, area logical exit, and that's it, and then wait for the next one.
Just to understand the price action more, I'm using a indicator called a zigzag indicator, just that goes to the highs to the lows and kind of defines the trading. Now, one of the parameters in that is the number of candles. You can specify the number of candles that have to be in that trend before you take it as a reversal or a retracement, so that you can distinguish between a retracement or a reversal. So what would you think like is the appropriate? If I see 3 downtrends and then I mean,
Yeah, look, I don't subscribe to that way of thinking,
okay,
talking about, right? For me, retracement reversal means, whether it's like bucking the trend and reversing, like totally, reversing, or it is just retracing and, and then again, so that's an assessment that I do based on my higher time frame analysis.
okay,
Number of candles on any chart will vary, right? It would be maybe a few candles on a minute chart, maybe tens of candles versus maybe 2 candles on a 5 minute chart, right?
yeah, I
It's
think it'll vary from a chart, I mean, time frame to time frame, I guess. I mean,
yeah.
yeah.
So for me, that's the way I assess is like a higher time frame analysis, and then use my bias, etc., right, for that kind of a thing. So that's why I mean I don't subscribe to that idea of that a number of candles will tell me will give me any more surety, right? So that's so in other words, I don't use such that kind of indicator because I have found that there's really not too much of consistency that those indicators can provide you over a period of time.
Okay. No, I was just trying to understand. So there's a zigzag plot that you can do, like that will go from the top of the range to the bottom of the range and then go to the next top, next high, and then go to the next low. So, but um, between those last high to new low, I was saying, what is it that is a manipulation or a retracement? I was just trying to, is it actually just a retracement, or the trend is still intact or not? If the previous low is not taken out, that feels like the trend is still intact on that chart. I mean, I was just trying to understand, so I'm just sharing some.
Oh, okay,
Yeah.
got
Yeah.
you. Okay.
I'm not to just rely on that, but I mean, visually get a understanding.
Yeah, so it would be good if you can share that in the chat today, like in
Yeah,
the on the website, right?
I will
Where
do that.
you can have a chance to look, and visually it may be appealing to a few of us, right? So
Yeah,
yeah, absolutely.
I will share that today.
All right. So yeah, I mean now it's the macro is over, right? And what happens for in a day like today, what you will see is like nothing but the algo will all it needs to do is to just spend time, right? Just think about it. You have 7-8 hours of you have till 4 p.m. Eastern So you still have close to 5 hour 45 minutes in the trading session. We know that the price likely is not gonna go outside the range, right? The sandbox that we talked about. What is price gonna do? It still has to spend that kind of time. So all it will do is just keep on going back and forth, back and forth, back and forth. And typically what you will see is that the time between the two macros is nothing but a time distortion. Okay. Because the decisive movements, etc., or the draw likely would happen during the macro. So, it's time distortion, which would mean that it is either going to keep on running short-term stops on both sides, number one. Number two, it is engineering liquidity on one side. I mean, it can actually do it on both sides. So what does that mean? That would mean in this context that the price may come here, come down, come back here, right? Maybe come down, come here, come down, come here. You see? So it's building up liquidity on one side, maybe building it up here, this side, and it's all crisscross, right? So this is the typical profile that you would see between macros. Okay. So again, it's low probability. It can just turn any which way, anytime, right? So if you are still looking at, especially on a minute chart, oh my, this is a bearish FVG, that is a bullish FVG, this is a breaker. It really would have no significance, right? Because often you will see, man, there's so many PD arrays. If it's non-macro on a day like today, it's doing it's setting up liquidity on one side or both the sides, and just running short-term stops in both directions. That's all it's gonna do, right? So that's why it's better just to be hands off. Just let
Vivek,
just
can I ask a question?
and then go there. Yes, Steve. Yeah.
So on the sell side, on when it created that huge FVG during the macro, do you disregard that because it's balanced when it come up the other way?
If it comes on the other side,
yeah,
I will. That would mean that this particular FVG has been reclaimed, right?
No,
And
the one
that
there's a huge one below it. As it was coming down, it created one.
Oh, this one you mean?
No, to the left.
On the red candles, yeah. No, the bottom. Yeah, right below that 930 FG. Yeah.
This one?
Yes.
Yeah.
Yeah. Yeah. So if you really ask me, Steve, given today's profile, I'm not paying attention to it at all. Okay.
Great.
Zero attention. It
you.
may be a BPR, this, that, and the other. But as I was talking about, we have to understand the PD arrays in the context of the time, right? Right. Next 30-40 minutes, you will see a lot of PD arrays getting violated, right? Reclaimed, rejected, all that kind of stuff. So, so yeah, again, it's all distortion till the next macro happens, right? So that's how we're going to be looking at today's.
Could you explain to me how you come to your bias of a range-bound day, please?
Yeah, so look, I mean, no news, right? No red folder news yesterday and today. If you look at the daily chart, you see all last 3 days has been, including today, has been consolidation, right? Large expansion days prior to these 3 days. So when you see this kind of an expansion for few days, often, and that too, like after a big event, right? You will see often that the market would go into consolidation. So a thumb rule for me is that if we see, like, let's say last 3 or 4 days, right? At least it will do 4 days, or it may go up to 4 times 2, 7 or 8 days of consolidation, right? I mean, that's generally what I have seen. It's really nothing is written, right? Nothing is fixed, but after large expansion, at least, you know, if there are 4 or 3-4 expansion days, you will see 3 or 4, maybe extending it to about 7 or 8, right? Something like that. But more importantly for today, the way there was no red folder news. Number 2, I saw liquidity build up, right? This side, as I was talking about before the market opened. And then I saw a liquidity which was there, which was purged, so I can't fathom a market going higher especially with the profile that we are in on a daily basis without taking this out, right? So, you put it all together and that suggested that very likely it would be a range bound day.
That's great. Thank you.
Yeah. So I guess we are getting close to about our session here. I was just looking at gold. So you see how this entire consolidation is very likely it will happen in this block, the block that I have drawn, this one that I'm talking about. I stretch it. This is where the likely consolidation area will be. And then it's gonna purge this. It has, you see again here also, equal highs being created. This one, right? Didn't purge, just kept it there. This is gonna be purged later. And then I think given again the profile looks like, may not be as big a day like yesterday, but it may finally work its way to 2633, right? So this is right, the kind of, so think about this as from here, one big circle, right? So this entire from here, all the selling from here, all the buying, right? And this would get terminated right here. That would be a typical, like a profile that looks like it's building up for gold. But we'll see here. Could you show us the 930 FVG on ES? Okay, so 930 FVG on ES. This is the 930 FVG. Why I have drawn not till from here to here? You see there is a gap between the bodies of the candle from here to here. This is volume inefficiency, and when there's a volume inefficiency, I extend because this is also an inefficiency. Fair value gap is an inefficiency, so I just combine the two, and I draw my FEG from this low to this high, right? So that's so this became the 930, and as you see here, 930, it's just been trading below only, right? So again, really an important point. Everything started with this SMT, if you guys remember, we were talking about it, right? This or this. ES started to break, right? So that was the first crack in correlation. And then NQ, we saw NQ ran this stop one more time. Not only that, took the Asia liquidity. So this was all a manipulation, right? So think about this as an accumulation, manipulation, and then the distribution. Okay. So all of that played out during our session. Guys, any questions? Because I think we're gonna be we have a few minutes left. So any questions?
I have a quick one.
Yeah.
Let's say you have a 4-hour FVG, right? And you invert that on a 1-minute chart. Does that become a macro inversion if it's during the macro time as well, or no?
No.
Got it.
No. Yeah. All right. So if there are no other questions, I'll let you guys go.
Thanks, Vivek. Thank you so much.
Yeah.
Thanks, Vivek.
Thank you so much, Vivek.
Thank you. Thank you very much.
Thank you, Vivek. Have a good day.
Thank you.
Thank
Take
you.
care.
Thanks. Bye now.